Good evening, you're watching The Big Question. I'm Sanjana. For nearly 8 decades, the US dollar has been the anchor of global trade and finance. It's the currency in which oil is priced, reserves are held, and debts are settled. But shifting geopolitics recently, rising regional blocs and growing alternative payment systems are prompting a question that was once unthinkable. Can the dollar's dominance actually shake? If it can, what would replace it? A basket of currencies, regional settlement systems, digital platforms, and what would that mean for exporters the world over, the Indian currency and the markets? To discuss this evening, I have Ajay Sahai, Director General and CEO of the Federation of Indian Export Organizations, with the exporter's perspective, Badri Narayanan Gopalakrishnan, trade and geopolitical expert, fellow and former trade head at Niti Aayog on the global shifts at play, and Jayesh Mehta, Vice Chairman and CEO of DSP Finance, a currency veteran who's seen the market cycles up and close. So let's start by understanding why the dollar's grip has been so strong for so long and whether the ground under it is really shifting. Badri, the dollar has survived wars, oil shocks, rival currency pushes before. What's different about today's geopolitical and economic environment that is making some believe that its dominance could be challenged at all?
Thank you very much for bringing me in the program. Definitely, there is an unprecedented situation for US dollar in the recent times. There has been a slight movement over the decades of reduced dominance of dollar, but that is very, very minor movement over several decades. And that is more because of the rise of China, rise of other economies over time. But right now, what is happening is because of all this, tariff uncertainty, the trade restrictions, and so on, many countries have already started, reducing their dependence on the US. And also, there has been increased initiatives by the BRICS countries, even apart from the BRICS currency, which is going to take some time. Even apart from that, there has been a lot of steps taken by various governments to reduce dependence on dollar, and ultimately any currency is just the value is just a reflection of supply demand dynamics. So if the demand for dollar goes down over time, it's going to definitely create a dent on the dollar. Okay. So I see that given all these trade situations going on and the rise of new emerging economies, the dollar will continue to kind of depreciate over time. But maybe the depreciation rate may be faster in the near future. But at the same time, the US government is also taking some steps on this. The recent initiative by the Trump administration on stable coin, promoting the cryptos for backed by the dollar. So those kind of things also may try to salvage the
Okay. So you spoke about the trade perspective. Then Ajay Sahai, does the reliance on the dollar then still serve Indian exporters well, or do you think it's increasingly a cost and a vulnerability? Ajay sir, you're on mute.
I'm sorry.
No problem.
In fact, so far as exports are concerned, and the depreciation of rupee against the dollar helps the exporters also. In fact, the dominance of dollar comes from the fact that it's a safe currency, it's a stable currency, and a liquid currency. Probably, definitely, countries are toying with the ideas of different currencies, that there is increasing influence with regards to the trading in local currencies also. And I'm pretty sure that these kinds of initiatives will gradually evolve, but I don't think in the short term there is any alternative currency which may replace or come as close to the dollar. Even though US accounts for less than 10% of the global trade, the invoicing in dollar is accounting for over 70% of international trade. And when it comes to the forex reserve, probably the dollar is dominant into that. Of course, the euro has also gained to the extent of 20%. When we are talking about the alternative currency, probably we have to look for a currency which can come as a replacement of dollar. And when I'm looking into the options which are available, I don't foresee any currency which may come as close to the dollar. If we are talking about a new currency, then we have to wait for time. We have to build trust. We have to look for the alternative system also for that to work. So I'm, of course, of the view that probably countries may start trading in local currency, and to some extent, that is an arrangement which will definitely gradually will move forward. So far as BRICS are concerned, I'm not sure there will be any consonance on a single currency which is currently in vogue. We may
Right.
look into developing a new
But are you
currency.
seeing that? Are you seeing that at the moment? Is there any kind of settlement or any kind of discussion like that on the cards that you're seeing?
I don't think so, because if you look into the grouping of BRICS also, there are countries who are staunch opponent of US. There are countries who are managing with the US very well. There are countries which have a strategic interest. So I don't foresee any currency which may be emerging. And probably the kind of stance that the US is taking, there's no point in showing red flag to the US at this given point of time.
Correct. All right. So, Jayesh, in pure currency terms, then what core advantages does the dollar still hold over any competitor? The yuan, the euro, or even, your gold-backed settlement systems?
I think, of course, everybody wants a change, as you said in the beginning. I think the Ukraine war and the freezing of the reserves of Russia, and then of course followed by this tariff situation which is being forced on people. Of course, people want now a shift away from dollars. Now unfortunately, there's nothing readily available, right? US, such a large economy, they have been also issuing so much of bonds, and therefore it has become a global reserve currency. Even if somebody wants to diversify his reserves, any central bank, whether it be it India or anybody else, there is not enough large countries who can actually absorb that kind of flaws, right? Today, we have $700 billion approx of kind of reserves, and if we want to do it without dollars, it's just not possible. Maybe over the last 2 3 years, people have increased some euro, people have increased gold, but gold also has limitation as to how much you can increase if you want the physical gold to be with you. So I think at some point of time, we need something to change people's intention, especially in last 3 4 years. Couple of two shocks which has happened. People don't now trust. Of course, nobody says in the open, but people don't trust, and they want an alternative, but there is no alternative. It doesn't look like coming for another 8 years, 10 years, or so. So we don't know how it will come out. Of course, one of the thing is as China is growing, if China's GDP starts growing much faster, but then again there is a trust factor there too. So I think while people are trying to settle in the local currency and all that, but at the end of the day, the dollar dominates. Your pricing is still being done in dollars. As long as the pricing happens in dollars, whether it is gold, whether it's petrol, whether it is bilateral trade, right? And you may settle it in rupee and AED or whatever it is, but it is still priced in dollar. Therefore, dollar is in dominance, and it will continue for some more years to come. We don't know.
Okay, so while the dollar still enjoys deep trust and network reach, I think cracks are appearing in the system is something that I think all of us are agreeing, which brings us to the practical question, because if the shift begins, how would it impact global trade and India's exporters in particular? Ajay sir, if alternative settlement systems gain traction, do you see exporters seeing immediate savings on transaction costs, or would the added currency risk and the lack of liquidity offset those benefits?
In fact, of course, if we start trading in local currency, both sides will be adequately hedged. So the cost of hedging will be minimized.
Sure.
And to that extent, it will definitely help the export sector. But then probably the central bank of the two countries have to constantly work on an exchange rate, because with the most of the currency, there will be no direct exchange rate with rupee vis-a-vis the local currency of my partner country. So in a way, dollar will come into effect. It will be very difficult to do away with the dollar. Though, of course, over a period of time, if we develop some mechanism and the central bank of the two countries comes to conclusion that over a period of trend, this is the trend, and therefore we can adopt some kind of non-market driven exchange rate, that may work. So in short, definitely it will help the export sector because they will be insulated from the cost of hedging. How the system will operate, to what extent it will help the export sector, probably only when we actually adopt that, we will come to know about that.
Right. So, Badri, then which global trade corridors are most likely to move away from the dollar first? Let's just say that this actually happens. And how would that affect India's strategic positioning?
Actually, as the esteemed Prime Minister also mentioned, the BRICS coordination has been very lukewarm. There has been some announcements, but then India has already clarified that there is no major initiative towards this new currency and so on. But having said that, if there is any set of countries where this de-dollarization that can happen, it would be mostly Russia and China, right? And then of course other countries which are already deprived of access to dollars, like Iran and North Korea and so on, Cuba and so on. So apart from this, I don't see any other major economies in the world single-handedly dominating. And also there is no concerted efforts by all these countries. BRICS is the closest we have got, but that's also not as considered as we would imagine. And you can see, Euro making some way, but they're also struggling there. So I don't see any major corridor being affected by this, apart from maybe Russia and China to some extent. But China also, apart from we're talking in the context of BRICS, they also, a few years ago, they came up with the sovereign national digital currency, which also has been used to increase the dominance of yuan. But even after that, the yuan's contribution to the global transactions is barely 2-3%. So it's very difficult to do anything against it. What I said earlier was that the dollar's depreciation and the participation in the global transactions may come down, slide a little bit, but it won't be enough to change the status quo.
Okay, so Jayesh, then could more local currency trade settlements actually destabilize smaller economies if their currencies are not globally trusted?
Won't really make any difference, right? As Ajayji said, even if there is bilateral between country A and country B in their local currency, because of no benchmark, it is then converted into, say, if it is, I'm just giving an example, INR AED, INR, it will be USD INR and then USD AED, and therefore you will derive a price for INR AED. So as long as, dollar dominance in everything, right, is there. Every pricing is happening in dollars. It's very difficult to move away from dollars. Yeah, you can do a bilateral, but it's like a barter, right? But you are pricing it off the dollars. So therefore, getting it away from the dollars, it doesn't make any difference unless you have very bilateral match trade transactions. But again, you will still price matched on what, right? So how do you know my export and your import is matching completely? For that, you still price in some currency, and therefore it is all being done in dollars. And therefore, at this juncture, difficult. Everybody wants something else, but it doesn't look like anything available at least in next 8-10 years, right? Maybe if some new methodology way comes in, but or some country becomes very large enough to absorb that kind of currencies by central bank investing into that. But otherwise, it's very difficult to think at this juncture.
So that's the trade picture, or whatever we can glean of it. But even if there's willingness, the ability to actually move away from the dollar depends on whether alternative currencies can actually handle that load. So Jayesh, a follow-up. To rival the dollar, a currency needs liquidity. It needs convertibility. It needs this trust. Which of today's contenders comes closest, and where do you think that they fall short?
Nobody actually, because there is euro which is there, but again the size is not that large, right? And the size will come actually from the GDP growth, right? So you have US as number one, then you have China, which is the very next after US, but then I think there is because of whatever history or something, people not gonna trust China that easily, right? So that is a challenge. And then rest of the another 20 economic countries, if you add up, it's still some total is not even adding to US, right? So how do you have fragmented? I'm talking about every country, including Euro, right? So some other mechanism like Euro brick, people are talking about like something of that sort may come through, but as of right now, it is more on an innovation stage, and nobody knows whether it will really work out or not. So I think till the time pricing happens, some people talk about crypto, but at the end of the day, you are still pricing the crypto in dollars, right? So as long as you are pricing things in dollars, you must settle in whatever currency, but as long as you're pricing in dollars, it doesn't make sense, right? Therefore, the dominance will continue. Just to give you a layman's example, I and you can settle in gold, but as long as if we are pricing our gold in dollars, right? Directly or indirectly, global gold price and then rupee gold price, and then okay, I said this is a service I gave you. So effectively, we are trading in dollars, right? So that's the issue.
So, Ajay ji, from a business execution perspective, would exporters adapt easily to settlements in multiple currencies, or does that complicate invoicing, hedging, cash flow management, all of those things, if we really need to come down to the practicals?
Absolutely, if you have to deal in multiple currency, accordingly, your cost and transactions, everything takes more time and more money also. It will not be possible. I think let us not look into de-dollarization or the trade. Let us look into how increasingly we can use the local settlement mechanism or some other currency. Because as other speakers have pointed out, the only country which is growing, which already have a currency is China. But whether Chinese currency is managed, whether it's market driven is an issue, and people are not having trust in that. Chinese yuan has been launched as an international currency roughly 15 years back, and they still only account for less than 5% of the global trade, and there too where China is doing it and China is promoting with Iran or with that matter Russia. So I don't foresee any other currency. If the world agrees for a new currency, that's a different issue. But amongst the existing currency, I'm not seeing any currency which can come even as close as US dollar.
Okay, so then Badri, could technology like central bank digital currencies, blockchain settlements, could this accelerate the shift away from any currency and solving some of these trust and settlement issues?
So US has already taken a major step in the recent months. Right? As I mentioned earlier, stable coin is going to be backed by dollar,
Right.
and so that way they have kind of taken on the whole blockchain digital currency landscape. China made that attempt a few years ago, but like JG mentioned, that has not created any dent because of the trust issues. Because in blockchain, the thing is, it's commoditization of trust. The trust is taken over by technology, but people are not that, I would say, naive or whatever you want to say, to place so much trust on a technology. So ultimately, it depends on who is behind that system, right? So now when US does that, that's going to have much greater traction compared to others. So I would say that the systems are there, the technology is there, but ultimately we are not moving on from the traditional notions of trust. So we, that is only strengthening the position of dollar than anything else.
Okay, so even if the mechanics work, I think the bigger question is, will the world actually trust and adopt a new system? And I think all of us here don't seem to agree with that, or rather that I think we're saying there is no need for that just as yet. So that's where the perception and market confidence come in. Because Jayesh, let's just actually, put ourselves in that scenario. In the event of a sudden move away from the dollar, what kind of market turbulence should businesses and governments actually prepare for?
Well, I'll break this in two parts, right? So one is the settlement part, right? So settlement crypto or gold, barter or local currency can do the settlement part of it. But in terms of pricing, so my biggest question is like, even stable coin, right? If it is stable coin linked to gold, right, or USD, it is going to get priced out of US dollars, right? And therefore, to get away from US dollars at this juncture is not possible. Yeah, you can, you can have better settlement system. Global settlement system was SWIFT based. Now you have Asia, BRICS, other settlement systems can come, blockchain systems can come, but they are all settlement system. It just eases your settlement side of it. As long as the pricing still happens in dollars, I think that my view is it's still far away, even if you say Bitcoin or whatever technology you say.
Okay, so do you then, Ajay, see Indian exporters proactively pushing for diversification in settlement currencies, or will they wait until that shift is unavoidable?
I think Indian exporters are only looking into two options. Either they are dealing with the existing currency dominated by dollar, or they are looking into local settlement or rupee payment settlement, because these are the two options which are providing them much comfort, as they are completely insulated from the exchange rate so far as exports are concerned. Though, of course, when you are talking about the rupee mechanism, the importer is exposed to those, though, of course, in the local currency, both are being taken care of. So at the moment, exporters are either looking into the existing option or they are looking into trading in the local currencies.
All right. Okay, I think we seem to have lost you there for just a brief moment. But Badri, big picture, does breaking or shaking this dominance ultimately create a more balanced and fair global trade order, or then are we just replacing one hegemon with another?
I agree with the latter, given that, definitely, everybody wants to, stop this dominance. Every single country, if you look at the internal discussions, they want to do this, but ultimately, we are not ready for, the shift from one known currency to a new unknown environment. So it will only create more uncertainty. So with all the uncertainty that you're facing, do we really need one more, major uncertainty? So that's the big question everybody's asking.
All right. So I think what we've more or less established is that this is not something that we're going to be seeing in the near future. And I think all of us here are more or less on the same page with regards to the dominance and whether it's actually been shaken or not. So thank you so much to all of my panelists that are joining me this evening for very beautifully encompassing and providing some comprehensive insight and analysis into this. The dollar's dominance has been built over 80 years on trust, on stability, and unmatched network. Shaking it overnight is not going to happen, and any alternative will need to prove itself just as resilient in good times and bad. And that's something that we have actually discussed in length today. So for India, the stakes are high, meaning more currency independence could mean more trade flexibility, but also new risks to manage. So whether the dollar's reign actually ends in decades or endures for another century, the world is already preparing for a more multipolar currency future. I'm Sanjana Chauhan, and this was The Big Question. Good night.